We're live. Hi, everybody. Welcome in. Michael here. In today's video, I'm going to be showing you the real estate loan application process, the questions that will be asked, and just what's involved and how I can communicate the process with you more effectively and efficiently and make it as easy as possible for you. Now, before I get started, if you're here on this live, give me a hashtag live in the comment section. I'm streaming on StreamYard, so you might have to allow it access. And if you're on the replay, give me a hashtag replay, hashtag team replay. So again, I know the time interval you've been watching on. This is going to be a very good one. And even if you're not in the real estate niche, if you don't do any type of real estate investing, this will show you more or less if you ever want to get into that space, what to look out for. And I'm going to get into the share screen in a moment, but I just want to say it's been a great start to the week already, helping out a lot of people get business funding in all types of ways. We're talking about real estate loans, cash advances, business loan terms, business lines of credit, and that list will go on and on. And one thing above all of this that stands out to me is the great amount of work you guys put into it. Yes, it's one thing that I put my time and energy into helping you out, but it's a whole nother thing when you're demonstrating that you purposely want to take action. You're not just sitting on the information that I'm giving you. You're actually applying yourself. You're filling out the application. You're going through the follow-up process, whether it is with me, our underwriters, our lenders, our team, and contributing. And that's very important on the two sides of this equation, right? And so I want to acknowledge, and I see that. I know you're working hard. And if I haven't gone back to you, I will. I know some of you guys have been trying to get a hold of me for some time. I will get back to you. Believe me, I have a busy and very productive schedule. And so sometimes I can't get to you at this second. So these videos and my content that I put out should give you much faster access in the meantime. Now, let me get into the share screen here so I can show you the questions that I will ask of you for real estate financing of any kind. We're talking about commercial mortgage properties, fix and flip, right? Hard money, bridge loans, and foreign nationals, rental properties. That list will go on and on. So let me get into the share screen right now. And by the way, if you haven't seen my other live videos, I talked about one recently about fundability factors to get your business in shape, things like websites, checking accounts, online banking setup, and more things. I'll leave that down below in the description, as well as other options available for you if you're not here for real estate and you want to learn how to get up to $2 million incredibly fast funding with no interest rates, no collateral, and no hard credit checks. You can even get up to $25,000 same day instant approval, unparalleled service where you get an answer right away, same day, funds deposited into your account. That will be down below in the description. Minimum requirements as low as a 450 plus FICO. Make sure to check that out again. Now let me get into the share screen. Okay, what you're seeing here is my questionnaire. This is what I'm going to be asking of you when, let's say, you want real estate funding of any magnitude. And this is what I deal with on a daily basis. I get people who say they want a certain property. They're looking for more space, something to rent out, a quick turnaround in profits, fix and flips, or if it isn't just a complete fix, it's just started from the bottom and you're constructing something. But again, you want to turn it around for profit. There are many different types of financing in real estate, and I just listed some of the many. But here, what I'm going to ask from you is one, what is a property address? Why do I need to know that? Well, every single state has a different average for property, the value, and the location has a lot to do, as you know, since if you've been in real estate for some time now, you'll know that the property is very important, as is the amount for the property being asked. So it depends on the location. It might be in a suburban type of an area, it might be in a more rural area, it might be in a more metropolitan area. And these things contribute into the economic growth and the supplies and demands of everything going on within the financing of that property. Now, what property type are we trying to do? Is it residential, commercial? What are we looking at here? So that's what I'm going to be asking from you to fill that in. And this will be down below in the description if you haven't already gone started with this and haven't given me information yet. I'll leave this down below in the description. But again, make sure you have things like property address, it's required, property type, very something that I need to know, because one thing, I know where it's located, and two, what type of property are you trying to purchase? What are you trying to own? What are you trying to rent? What are you trying to fix and flip? And the location, again, has a lot to do with this, of the value. So if purchase, what is the purchase price and the down payment you have available? So a down payment, it shows, okay, you're willing to put one, some skin in the game, but then two, you also understand that to own a property, you have to take into consideration that there's some kind of, maybe if it's an equity, free equity, or it can be something that you're putting a down payment, you're putting in maybe another property, something in as a collateral to be able to pay for the new one. So very important. And what do you, if you're asking what is the actual percentage of a down payment, it ranges, but usually you'll see between 20 to 40%, with 30%, it can be in the middle and the sweet spot for most people, but it depends on many things like, here, let me come back to this. Okay, good. But I exited. It comes down to also your finances. It comes down to how are you doing from month to month? Are you able to put a certain amount down? What are we looking at? We're looking at the certain LTVs, loan to values. We're looking at things like refinance if you're doing that. And so that list will go on and on. So again, here, if refinance, what is the estimated value of it and what is the amount owed? So if you're looking for specifically something like a cash out refinance situation along those lines, where you want to, you have a property, for example, and I've had many people with this one out of many situations, they come to me, hey, I have a property, it's not getting done as fast and it's requiring more money. I've already paid this amount and I would like to see if you can buy it out and we can refinance with a new loan. And I'll say most of the time, yes, that's very possible. That's what can happen in this field. And then two, what I like to ask is, how much do you own on the current property? Reason I ask is I want to know what the ratio would be of what you owe as to how much you would need for the new property and what you're looking for. And then we can calculate if it is even worth moving forward from there. And things like loan to value come into play with how much you're trying to borrow, etc. So, and what is the amount owed? Very important information to use. So another question here we have, closing under entity, LLC or Inc., or corporation or personal name. And that's very important to know too, because we want to know what type of business identity you have established. And it shows some kind of credibility as to how you're accepting things like business credit, personal credit, and just the types of procedures and the types of flexibility that's given within each of those entities that I won't get into detail in this video. Again, if you want to understand how to get funded and more fundability, that video will be down below in the description, whether you're watching it now here in the group or you'll be watching it on YouTube. So amount of liquid assets available. So we want to know if you have any, and this would help determine what, if anything, do you have to give up to get the property, or how far, to what extent we have to go if we don't approve you, or if the information you provided to us doesn't match up and we can go an extra step further. So how many investment properties have been owned by borrowers with yourself in the last 36 months from there on out? And then that's obviously what you want to make sure you have in detail. How many investment properties have been owned by the borrowers? Okay, so very key. What is your estimated credit score? That very important, because credit factors in to, one, not only how much funding you can get, but can you get it at all? If you have a poor credit score, but you're asking for a certain amount, then you might not get it at all, or you might just get a little bit, or it will just write you off because it doesn't show it sufficiently. You're making the right type of payments. You don't have enough payment history to support giving you the amount of funding you're requesting. for your project or projects. And that list goes on and on that I won't get into detail in this video. But if you want to learn more about how to build not only personal but business credit worthiness, then I'll leave information to that down below in the description. You can pick up something for free and also check out some extra training for it. So is a property generating income? So we want to know the property you're buying, even the one that you currently may own, are they generating income? Why? Because we want to know if it is even worth pursuing and putting the amount of money it is worth putting to it, and to giving you the amount of funding you want. Rate and term expectations. So I'll talk a little bit about this moving forward, but what is the rate you are willing to take, and what is the term length in terms of years? And this is what we're talking about when we talk about real estate. Depending on the type of real estate, it can be 1 to 5, 5 to 30, and the rate, it can vary. It can be as low as a 6% to 14%, depending on the program you are with. So that's something key to know. And those rates relatively low because of the term length. You're talking more in years, a longer duration for these projects, and the finalization process and so forth. And then a few other things that are just more miscellaneous, as like your name, your email, what's your phone number is optional. But I highly recommend you put that information in so I can follow up with you more appropriately with quicker access, so we can help you get the funding and the properties and everything established. And then any additional notes you'd like to share with me, you can go ahead and add there. So this whole form here will be down below in the description. Make sure to check that out if you're trying to get real estate financing. And for any other types of loans as well, then you can go ahead and check that out. Now I'm going to quickly shift gears here. I'm going to move out of this screen, and I'm going to show you the actual look through a real estate application so we can see this in real terms. Okay, this is just the one of many. Let me open the screen. So this is just one of the many applications. That's your uniform residential loan application. And what you're going to see more or less in one of these applications are things like the borrower, co-borrower, if there is one, mortgage, applied for, VA or FHA, conventional, other, you can explain that, USDA, rural housing service. You have things like the agency case number, a lender case number, the amount being asked for, the interest rates, number of months, authorization type, fixed rate, GPM, other, explain, ARM type. And then you have things like subject property address, which includes your street, city, state, and zip. Legal description of subject property, attached description if necessary, number of units, and then the year built. What is the purpose of this loan? Are you doing it for a purchase, to do a refinance, construction permanent, other, please explain. The property will be primary residence, secondary residence, or investment. You can complete this line if construction or construction permanent loan. If you fall underneath this category right now or will in the future, you would want to put the year lot acquired. What is the original cost? The amount existing liens. A, present value of the lot. B, cost of improvements. And then total, which is the A plus B, as you saw here, present value versus and the cost of improvements. And then complete this line if this is a refinancing loan. You're going to be asked more so kind of the same: year acquired, original cost, amount existing loans, purpose of refinancing, describe improvements made or to be made, and the cost amount. Title will be held in whose names. If more than one, add it there. Manner in which the title will be held. Estate will be held in fee, simple, or leasehold. And there's some information there. Source of down payment, settlement charges, and or subordinate financing, please explain. So this is just borrow information. We have the borrower on the left and the co-borrower if needed. Borrower's name, social security number, very important you put that information, because this is stuff that's also tied to like personal credit and understanding just better about how you're making your payments and things like that very much go into account. We want to also see with any type of a business loan, is it's legit. We don't want any type of fraudulent activity. So when you go down this list, and what our lenders and our underwriting team look at, and what I look at too, is are you being legitimate? Are you being trustworthy with your content that you're putting in here? So we have home phone number, date of birth, years in school, married, separated, unmarried, dependents, not listed by the co-borrower. And then we have things like present address, mailing address. If residing at present address for less than 2 years, complete the following. And you can see there, borrower, your employment information, very important you put in this. Name and address of your employer, self-employed, years on the job, years employed in this line of work, profession. We want to know just how much experience do you have? Is it worth you being somebody who can get a real estate loan to begin with? Are you somebody who's just starting out, asking for too much, and doesn't have any kind of like skin in the game, and it might not just work out that way? You got to understand that the lenders are trying to give you money, but if you don't have no experience with any kind of hard money loans, bridge loans, commercial real estate loans, and you're asking for these absurd amounts for an extended amount of time, and it's going to be your first project, it's not always the easiest. Even if you're generating some kind of an income, maybe you have a past business and you're trying to get into the real estate financing industry, it can work, but I wouldn't count on it being absolute. Now, you have things for the co-borrower there, and we'll go down this list, but you can see little things like this: dates from to, monthly income, business phone number, dates, monthly income again, name and address of your employer. We have things like position, title, type of the business, and monthly income and combined housing expense information. We have categories on the top here as gross monthly income, borrower, co-borrower, total, combined monthly housing expense, present, and then proposed. And I won't cover every little detail because I want to move down this application and then show you a few more things, but just to go through it, you can see things like base employee income, overtime, if any, bonuses, commissions, dividends and interest, net rental income, other, and then the whole total. You want to put that down there. Make sure you go through it, every category, and all the information is in there. Describe other income, if any, and then the monthly amount. Assets and liabilities. We have the assets on the left, cash or market value. You would add that amount there. List checking and savings account below. The account numbers in its place. As you can see, if more than one, you do that. And then subtotal liquid assets there, and then put that on the right side, and then you come down here to your total assets. And then we have liabilities on the right, monthly payment and months left to pay, unpaid balance, however many, you put that in there. And then we have things like assets and liabilities that are continued, scheduled of real estate owned, property address, type of property, present market value of it, amount of mortgages and liens, gross rental income, what is your mortgage payments, insurance, maintenance, taxes, and miscellaneous, net rental income at the end there. And again, we have alternate name, creditor name, account number, details of transaction, and then declarations. Very important information, again, that you put in this. I can't stress out enough that you have all this information in where it needs to be. Things like purchase price, alterations, land, refinance, estimated prepaid items, and total costs, and so forth. You can see things on the right-hand side where you can check off or underneath declarations. Things like, are there any outstanding judgments against you? Have you been declared bankrupt within the past 7 years? Why is this information important for you? Because we want to know if you can handle the loan, one, and what type of history do you have and potentially can run into that our lenders will be like, we're not sure about how to lend you or if we can lend you. So that's something to understand. Acknowledgement and agreement. Please don't forget to sign. That's one of the things that most people miss on every application, one out of the many. But that has to be like the number one, is the borrower's signature, and then the date is another one that most people miss. So make sure you sign it and date it. Core borrower signature and date. Information for government monitoring purposes only. There we go. We have things like ethnicity, little things you would see if you were to go fill out like a work application. Just pretty standard procedure. As you can see there, continuation sheet, residential loan application. So this is just the one of many that I showed you. Now let me come back from the screen and we'll kind of round up this video. But let me know down below in the description, are you trying to get real estate financing and need help? What types of programs are there? I'll leave information to it too down below in the description so you have all of that on hand. Now I want to show you some of our expectations and kind of what you're going to see with some of these loans. Let me move this over here now. Okay. What you're seeing on the screen is, as it says, real estate loan product summary, the requirements and documents. You have on the top the types of loans. You have things like hard money bridge loans, fix and flip or cash out refinancing. You have rental investment property loans, commercial property mortgage, ground up construction loan programs, and there's more. But this is going to show you an overall look at just some of the descriptions to it, the requirements, what we're looking for, what I'm looking for with my lenders, my underwriting team. So the approval amounts for hard money bridge loans, we have 100,000 to 50 million. That is with a certain program. If you want to learn more about them, I'll link to them down below in the description. One of my #1 recommended programs to get real estate financing through, and where I've helped out many. We have 65% to 80%, up to 100% rehab funds, 50% to 65%, up to 80% of the rehab funds. And on the right here, we have credit above 650. That will vary. It doesn't have, you don't have to be above 650 for the most part. We can be lenient. It can actually be less than that. We're looking at like 500 and even no credit checks. This is just showing you for the loan to value range. Keep that in mind. This is the loan to value percentage range. And what we're kind of looking at to it kind of goes like with working capital. Are you an A, B, C, D type lending client? And how can we handle that? Experienced investor, are you low risk property? Or do you have low risk property? Low, no credit, limited experience, high risk property. And then you can see we have a little lower of a loan to value. And 6 to 24 months, interest only, which is the term length. Interest rate percentage range, you can go as low as 6 up to 14% more or less. And we kind of see some of the credits that are more appealing to that. So keep in mind, if you get a lower interest rate, it means a couple of things. You have better revenue. We'll look at bank statements most of the time 3, 4+ months, and we're judging to see what type of finances you have coming in, monthly revenue and sales per month, gross revenue and so forth, and understanding that, hey, what are you projecting from month to month and what has the last month looked like? And if we see higher amounts, we might give you a less amount of interest. And we also factor in some of the credit. How's your credit worthiness? Are you making payments on time? Do you have enough payment history? How much payments are you doing, or how much are you making, and so forth? And so we take that into all account with a few other things like bankruptcies and if any kind of delinquencies. And I don't want to get too far ahead of myself with all that information because I can go on a long list of things that we will look for. But you can see that. So like things like non-sufficient funds, negative days, stuff like that. But you get the idea. We have things like prepay penalty, varies, it can for hard money loans. Foreign nationals are eligible, time to close 2 to 4 weeks. Some documents that we asked was 1,003 real estate loan application, 3 months of bank statements for this one, purchase agreement if you're buying, a recent mortgage statement, refinance, recent credit report, copy of appraisal if available. And so that was just a section on the hard money bridge loans. We have things like rental investment property loans from 100 up to 50 million. So the minimum property value is at 150,000. So let me move this screen very quickly. So I've had people come to me who they have a current property who are getting money more into that property. It's maybe taking more and they're looking for some kind of a cash out refinance situation. And you'll come to me, might be a different scenario. There are plenty of them. And you're like, well, help me buy out this loan and then I'll do a cash out refinance, or in a different way, we can use a loan from you and we can make it happen that way. Or people will say, then I can just get a business loan and pay off the rest and so forth. Either option is great. It just depends on your need. And what I tell you and I tell everybody else is, what do you think, one, will be the result of you finishing that property or fixing and flipping or whatever it is? Not only in terms of profit, I get it's a profit, but emotionally too. What do you feel the attachment would feel like if you were to finish it and get it done? Would it be of a higher value to you? Would it be more meaningful to get that project done? Are you trying to help a certain family out? Are you trying to, what kind of vision? And then two, yes, what kind of flip, what kind of profits? And if you're in a place right now where the market's telling you, if we make this happen today, we fix all this and we sell it, we can make a $300,000 extra profit, etc. So you got to look at those basic things. And I know I say basic, but really, when you think about it and you put it together, it is as simple. But we have things like 70% to 80% for purchases of rental investment property loans, again, 60 to 75% for cash out refinancing, and then credit above 650. We have experienced investor, credit above 650, experienced investor again. And then you have the term length from 5 all the way up to 30 years, 4 to about 7% there in interest range. And we see the years, how much you get depending on that interest you get. Yes, depends on loan term for prepayment penalty is very common. And ineligible for foreign nationals, 3 to 4 weeks for closing. And then more or less the same for documents with a few other things in there. Let's see here, rent roll if applicable, and so forth. So you can see that. And then we have another one here. We have commercial property mortgage from 100 to 50 million. Minimum property value is 150,000. 70 to 75% loan to value range for a credit above 660, which is income producing, and it's a low risk property. 50% to 70% credit above 660. Vacant property, high risk property. So you see the difference there with vacant and income producing, and then high risk property versus low risk. You get a higher loan to value. And how we calculate those things is how much you get in funding versus the amount of property valued at. And so we just kind of calculate more from that. Ground up construction loan program, as you can see there, but term length for the commercial property side, 5 to 30 years. Interest rate percentage range, 6 to 9%. And then you have 10 to 14%. Again, it falls underneath certain categories. And if it's income producing or vacant property. And then down here, prepayment penalty, yes, depends on the loan term. Foreign nationals eligible. Time to close, it's 3 to 4 weeks. So similar as we saw over here with the rental investment property loan. And then the documents required. This one, we need a commercial real estate loan application, which I can help you with. So again, the 3 months of bank statements, purchasing agreement if buying, mortgage statement if refinance, recent credit report, rent roll if applicable, copy of appraisal if available. There will be times where it might not only be 3. Oh, here, let me move the screen. I know I was going on with me on the screen there. There will be times where we may ask for an extra month worth of bank statements. Things may change where we look at your information in your profile and we say, oh, we'll need an extra month, or we'll need some of this information. But for the most part, it's what you're seeing here. And if you didn't get the rest of it because my face was in the way, do apologize. But we were going through the rental investment properties, commercial property mortgage, and I'll scroll down here so you can just get a quick glance at it, and we'll move on to the next one. We have ground up construction loan programs from 100 to 50 million minimum land value. We want it at 150,000. We have a loan to value percentage of 75 to 85%, up to 100% rehab rate benefits. Credit above 680, a little higher than we saw in the previous ones at 650 and 660. You have to be an experienced investor at that range. Desirable market area, what we want to look at. That's why location is very important. You get a higher loan to value for that. 55% to 75% loan to value, credit below 680. You're limited with no experience, high risk market area. So when people come to me, they're like, hey, Michael, I want a real estate loan. And I go, okay, how much experience do you have? And most people will tell me they don't have experience, but they want to get into the industry. Can you get financing? Like anything, it is possible to help. But what we want to see too is, one, credit worthiness. We want to know things. We will look at credits. We want to understand how you're making payments. We want to know what is happening financially. Maybe you have a business you're running now and you're like, okay, this is how we operate. But just know it is more high risk and it isn't always fundable. So just keep that on the back of your mind. It's kind of like when you're doing startup loans for any other type of business. Similar, you're looking at crowdfunding, you're looking at turning to friends and family, personal credit, business credit, and that list will go on and on, but I don't want to spend time on that. Now, we just went down this list here from ground up construction, prepayment penalty, none. Foreign nationals, depending, case to case. Time to close, longer. You get 3 to 6 weeks this time. Now, what do you need for documents? 2003 real estate loan application, 3 months of bank statement. Similarly, investment history and experience, definitely needed for that. Schedule of real estate owned, scope of work and use of funds, plans and permits, purchase agreement if applicable, and then a recent credit report. That's what we need. Okay, so it'll look like that more or less, and then I'm going to show you a quick one, and then we'll round up here. But this is one example for a commercial real estate loan application. Let me open that screen back again, and I do apologize again if the last one wasn't opened. So we'll wait for this to load. So this is just kind of a look through for commercial real estate. There's a few other ones out there like hard money loans, and the list goes on. Scenario parameters, things like name, phone, email, credit score. You can have a little drop down here. Social security number, very important information. Date of birth, how many residential rentals do you currently own? How many flips or rehabs have you completed in the last 3 years? Again, this goes back to experience. Do you have experience? Do you have low experience? None. Are you more high risk in that case? How many commercial properties do you currently own? How much do you currently have in liquid assets, reserves? And then source of down payment, you can see here, and then provide a brief description of your loan scenario or any additional info we should know. So that is it more or less. And I'm going to have that contact form I showed you at the very beginning of this video to make sure you check out and fill out that information of those 10 or so questions that I'm asking for. And what will happen, let me move this screen out of the way. So what will happen in the process, you're asking, so once you submit your answers to those about 10 or so questions that, again, I'm going to leave in the contact form down below, I will get your information, I will analyze it, I will assess it. That's what I always do. I know what the lenders, I know what our team will look at, but I want to make sure all the information lines up. For one, I'm looking to make sure all the information is filled and required. And then two, I'm going to see things like fundability. I'm going to understand, do you have any type of business credit? Do you have this going on? And I'm going to match things up with my experience understanding these things. But what I'm going to do is after I contact you and I qualify you, and we go ahead and see all this, I'm going to send it over to my financing team. We're going to go through it together. We're going to look at it and say, okay, what are the terms we can get you on based on what your application or your questions, everything that I'm asking from you, we can get an assessment of, okay, this will be the term length. These will be the rates we can get you. And again, it comes back to that sheet we just went over. And seeing the low risk, do you have any experience underneath those certain categories? Low risk property, low no credit, limited experience, high risk property, those types of things. And so just keep in mind that that's what we're going to look at. And then through the process, I will be able to get that information from my team. I'll send it to you. And if you approve of that, we will be able to go through the process and then be able to present to you the terms. And then I can notify my financial team. And once you accept, you can receive the loan contract and I'll send it to you as the client. And we go through a whole contract agreement there. And then there you go. The deal gets funded. But that's the step-by-step process. So qualification criteria, again, contact and qualify you as the client. I'm going to gather the documents, submit this deal over to my team. I'll receive the approval terms. And I can send them over to you, and then you choose to decline them or accept them, and then present the terms to you. And then I'll notify my financing team again once you approve of it, and then I'll receive the loan contract and then send it back to you as the client. And then I can send that back to my team for the signed loan contract, and then the deal gets funded. All right. So that's a little bit of a rundown of what you're going to expect in all of this. Now, if you need help getting real estate financing of any magnitude, as we just saw here, and more, you have any questions you want to ask me, if you want to get started already, look down below, fill out that contact form with those questions, look for more content I'll leave down below in the description. And if you got value out of this, give me a like, share this with others who you believe will get tremendous value, who need help in any area. I get people that come to me who may not need, like real estate investors, they may not need to do a deal right now, but they know other people who do. And so they'll be referred to me and I'll talk to them. And if you have anybody who needs help with it, being pointed in the right direction, and I'll be here to do this and assist you with it. And on all types of small business loans, that'll be also in the channel if you're watching this later on YouTube. So that is everything from me in this video. Make sure, again, to get started down below if you need help. Thank you.